Paul Roch, thank you so much for being on the Brick and Mortar Visibility Podcast.
You're welcome. Glad to be here.
All right. Okay. So Paul is an accountant. Yes.
Yes, that's correct.
CPA,
Yep, CPA.
same thing.
Yep.
So he's going to talk to us about numbers. And, this is the numbers I do are 5, 6, 7, 8. All right. So I'm a dancer. All right. And Paul is going to get into the weeds a little bit, but make sure that we all understand it in layman's terms. So, Paul, tell us a little bit about who you are and who you serve.
Sure. So thank you, Melissa, for having me on here. So my name is Paul Roch, as you said. I am a CPA down here in Texas, and my niche that I'm serving is boutique fitness studio owners and high ticket online coaches, typically doing between 180,000 to $500,000 a year in revenue, and wearing all the hats.
I love it.
So from teaching to mopping the floors to you name it, to bookkeeping to all of it. And so what I do is I take away some of that fear and frustration that many people feel around numbers and talk to people in everyday language. So not accountant speak.
So what got you into the niche of fitness and health?
That's a great question. And so what really how I got into it is I've always liked working out. I was working out with an online fitness coach. I got my CPA back at the end of 23 and decided that I wanted to work with small businesses, but in particular the fitness studios, because just my experience with my online coach. Also, I think it's a underserved niche, and the one thing I love about studio owners is they want to see such transformation in the clients' lives,
Mhm.
and at the same time, there's also that fear of numbers going, oh, I don't know what I'm doing here. And so just to be able to serve those clients and take away that fear, that frustration, and also just to give back. And so
Mhm. So so many things just swam through my mind right now. So when you say you're online coach, you're online fitness coach.
yes, my online fitness coach.
Okay.
So
All right. And we've had many, not many, but we've had a few CPA, CFOs here on the podcast. And I wanted to have Paul on as well because everybody, we gravitate towards different people. But without money in the bank, there is no mission. And that's what my business coach says. So if you don't have money to market, if you don't have money to pay your teachers, if you don't have money to pay the rent, all the stuff, you don't have a business. And I ran my business as a glorified hobby for many, many years and didn't realize it until I got myself somebody to create a customized dashboard for me so I could really see what those numbers meant. So, what are some common mistakes or things that you often see that need to be addressed when you work with your clients?
well, kind of the first thing is that lack of separation between the business expenses and the personal expenses. So,
Really?
yeah, you'd be surprised at how many times people are mixing the two.
Huh.
And that, I mean, as you're aware, that becomes a huge liability at tax time. You're going, oh, what did I spend this on? And if you don't have that clear delineation, unless you have receipts and have a purpose and benefit, it's hard to know what you actually spend on the business. Some other things, there's not doing any monthly closing or reconciliations between their bank accounts and their credit card statements and their the QuickBooks or their Zero system. So they're making decisions off of their bank balance, which sometimes it's not a good idea. You know,
As I'm shaking my head, no, like
so
QuickBooks
then
actually looks better than my bank balance.
yeah, and then treating your class packs and gift cards as true revenue instead of liabilities as to when they're earned. So saying, "Oh yeah, I sold $2,000 in gift cards." Well, until somebody redeems that, you can't really count that as revenue. Um,
Can you explain a little bit more on that?
yeah, so
Why can't you put it as revenue if they're paying you for it?
because it hasn't been redeemed yet. So let's say you buy a gift card for somebody
Yeah.
for $50, right, to come in and do one of your classes.
Hmm.
Well, that's a something that you as the business owner owe somebody. So it's a liability. But when somebody comes in and turns in that gift card, then you can count that as revenue. So it's really
Mm,
kind of it's deferred revenue, but you
sure.
really haven't earned it yet. Um,
Hmm. Okay.
so and one of the other things I see is, um, owners not paying themselves
Hmm.
anything at all. Or,
Hmm.
sometimes we're just going back into the business or not paying themselves on a consistent basis.
Hmm. Yeah, that's very true. Very true. Um, okay, so can we go back to that gift card thing?
Yeah.
That's new to me. I'm like, wait a minute.
Yeah.
I'm getting the money. I understand. I understand. So when you enter it in, like, how do you enter it in then? Because it's coming, you have cash coming in. How do you document that?
Right. Um, that's a that's a great question. So you would enter it
That's why
in.
you pay me.
Right, right. So you'd enter it in as you would take the cash in.
Yeah.
So that goes to your bank, but then you'd have the gift card would be as a entered in as a liability. So as a so you're yeah, so it'd be entered as a liability on
Hmm.
your accounting system, and then the
Hmm.
cash would be, increasing your cash. So while you've taken in the cash, you can't count it as
Income.
revenue on the accounting side because you haven't earned that yet, right? Or somebody hasn't
Hmm.
redeemed it. And so,
Okay. Huh. I've never had that explained to me. Very interesting. Okay, so CFO, I've
hmm.
also often been coached that I don't need one yet. I have a bookkeeper. So when I ask this question, nobody ever wants to give a solid straight answer. It's always, well, it depends. So what is yours answer for
Okay.
a CFO?
Well, I'm not going to give you a depends, but I will kind of get a little bit more clarification. So, bookkeeper really just records the past,
Yeah.
right? Says what's happened, doesn't really give a lot of in the traditional sense of a bookkeeper, doesn't give a lot of insight into the future, saying, "Hey, this is what you can do to, to increase profits," or, "Hey, your cash flow is up and down. You need to put your high right this month. Let's put aside some for the future."
Mhm.
Um, so you really bookkeeper is for more compliance based, whereas a CFO is if really you're kind of adding locations. You've gone beyond one location. You want somebody helping you with some hiring decisions.
Mhm.
If you have a recurring cash crunch, that fluctuating cash flow, um, they can help out with debt or equipment planning and also some what if scenarios.
Mhm.
Um, so, like I said, the bookkeeper really tells you what's happened. CFO tells you kind of helps you decide what to do next.
Mhm.
And some of the kind of the other reports, like the CFO can produce or help you with, they can do your cash forecasting, you work on your pricing and your margin planning.
Mhm.
Um, and the KPI dashboard. So, your key metrics you're looking at. And so, like I said, bookkeeping looks backward. The CFO really points the headlights forward.
Mhm. Mhm. Having having my person help me with this, just for somebody who literally, um, for way too many years, y'all, just did this napkin math bookkeeping. I mean, I had my QuickBooks, I had my P&Ls, I understood that aspect of things. But when it came to how much could I afford to hire, how much is my overhead really costing me, and how much can I raise or should I raise? Okay, two different things because we all have an issue with pricing. We all do, right? And so we need our black and white CFO people to say, no, you need to raise it this much if you want to make this much. And my brother worded it really nicely. My goal is always a 20 to 25% profit. And he goes, "Yeah, you can do that, Melissa." Or you can say, "No, I need to make 100K this year. So what do I need? How am I going to price things out? And how am I
Yeah.
going to structure things and work it backwards that way?" And I was like, it was like this huge light bulb moment. I'm like, "What? I can decide. I can say I'm going to make this much and charge people accordingly." Like
Uh-huh.
that just didn't that was backwards to me.
Yeah.
Uh and part of that is that an mindset, is that a fear mindset, all of it, just like, oh, so,
Yeah,
but it was,
if I raise my rates, I'm going to run off my clients.
hmm
They won't pay for these services. And, part of that is more than just, what you're providing, but what the value or the community you're providing also, right?
Yeah, is there's so much into that, and then there's so much baggage that prevents it. It's just I've been in business 17 years, and still in the back of my mind, I hear my mother like, why would anybody pay that much? And so
Right.
silly, so silly. So if you ever have that, y'all, you're normal. It's totally normal.
That's just starting out my business, I totally feel that, right? Like going,
Hmm.
okay, I'm providing values, like, and it's that intrinsic value, right? Going, oh, I am worth that much.
Hmm.
And kind of piggybacking on, you said,
Yeah.
if I want to make $100,000 this year, what do I got to bring in? I actually have a spreadsheet that I've built, a profit plan, a calculator that I can send you, which says I want to take home X. Here are my expenses.
Hmm.
What do I have to bring in to make that possible?
Hmm. Hmm. Love it. So you can give that to our people.
Yes, I can.
Awesome. That'd be great. Um, yeah, and then breaking it down. Okay, so how many students, how many classes, how many sessions, all and and you smart people can build that out really nicely. Because yeah, I just you it's just so interesting. What I find fascinating is I appreciate it so much. I appreciate it so much because like this is just so easy then. It becomes so easy to make a decision because it's black and white numbers. Okay. And when we can see that, we go, oh, okay, well, that's just the way it is. This is how much expenses are. This is how much I want to get paid. This is how much teachers are. This is how much overhead is. This is how much I can afford to pay you. Sorry.
Right.
Sorry. It is what
Yeah.
it is. Um, and when it becomes that clear, it just becomes it. We have decision fatigue as business owners. There's so many balls in the air, so many things to think about. So when we can just go, here it is, spit it out. Um, I have personal side story for those of you in the audience. So I'm a dance studio, and we added a competition team to our dance studio. We've been rec for 15 years, and we in our 16th year we added a comp program. We're in year 17, and my comp people are super excited about our comp program. They're like, yay, we're doing it, we're doing it. And I have this beautiful spreadsheet built out telling me how much to charge, blah, 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 making sure I'm 25% profitable. And there was a miscommunication. I don't know how, but miscommunication that I said we're doing 3 events. And they thought that meant 3 events for them, and then the one that we do as a community. So they signed up for a fourth comp.
Ooh,
And I was like, and the prices have already been given out to the families. And I was like, how was that A? How was that missed? Okay, that's it. But then going back to the dashboard of like, okay, what does that mean? Okay, so what can we chisel down here? How can I chisel here? Okay, we're not at 25% profit. We're down to this profit. But I was just like, we can't, or I had to say no. So I'm like, really going through it and like, okay, well, that means I can't pay you guys for this, but I can do this. Are you willing to do this? And going back and forth. But just those hard decisions of like, no, no, I need to be this much profitable because my
yeah.
goal is to sell my business. And
Mhm.
if I don't have this much profit, I can't sell my business. So
Right. Yeah. But so imagine how much more difficult those conversations would have been if you didn't have that spreadsheet.
exactly. I
You'd
would
have been
have no
like,
clue.
I don't know what to do. Yeah.
Or
So,
sure, let's do that. That sounds like a great idea. And then
and like,
and then in the meantime, I'm not paying myself. And yeah,
right.
it's not fun. And then
Yeah.
it is not fun with a capital F. So super fun. Okay, so let's get back to business. What are 3 to 5 things that are missing did we ask this already?
No, we
When
haven't.
looking at people's books, what are those
Uh,
things?
so one of
Tell
those
me.
things is that deferred revenue we talked about
Yeah,
earlier.
yeah.
That goes not only for gift cards, but also any class packs or memberships you're selling because you haven't earned it yet. Sales tax,
Mm,
either not being paid or mapped incorrectly in your books.
yeah, yeah.
Um, no clear owner compensation, so a draw versus W-2 employee. Um,
Mhm.
and just miscategorization of expenses. And so, or you said, "Oh, I thought I had this line in there," and then you add in a different spelling. Well, now that's a different line in your QuickBooks, and you go and you're trying to do your profit and loss. You go, "Why do I have 2 lines that look almost exactly the same? What did I do?" And so, Um, so yeah, those are some of the the things that are
Yeah,
missing or miscategorized.
absolutely. And those are easy to do as far as
Oh
misspelling
yeah.
spelling
Yeah.
something wrong, adding a space when it shouldn't be, and then you have
Yeah,
double
no,
expenses.
I was actually just working on a consolidation report for 7 different studios.
Okay.
They had I got the P&Ls, 7 different tabs in the spreadsheet, and so I could put them all into one and going, okay, what are we doing here? And then they had totals in it's just so
Yeah.
backing it out, going having them now a clean profit loss statement, going, oh, well, that makes a lot more sense now. So.
Right. Yeah. And it is, you guys, when we're in it, we're in the weeds. We're just we're just kind of going through the forest trying to just find that trail again. So to hire somebody and invest in that money is so smart because it just they're able to see it clean cut and in so much more time efficient. All right. And then they can give it back to you and it's clean, it's understandable, and then you can go forward. And then chances are you're going to have some questions in a couple months, and you can go back to them and
Mhm.
ask the questions, and they can help you with that. So, what is one money myth that's holding studio owners back? I love this one.
I need more clients in order to pay myself.
Yes.
Oh, I hear that all the time. If I just had, 5 more clients or 10 more clients, then I could do X, Y, and Z. Well, maybe you just need to raise the rates and or on your current clients, you know, just having more clients without a clear margin and a cash plan. It just digs a deeper hole, right?
Hmm.
And so,
Hmm.
um, yeah, more revenue isn't, the same as more profit or more paycheck. And so, because with more revenue comes kind of sometimes comes more expenses. And so,
Hmm. Do you find the opposite true? Do you find that studio owners, their expenses are out of control, or overall, are they pretty good about that?
I think it varies. It depends.
It depends.
It depends. Some people who are just starting out or, they're, setting up their studio. So they've got, all these expenses up front.
Yeah,
Whereas established studio owners I think have a better sense of what they can cut or what they don't need. So it just varies, where people are in their stage of life or their business journey.
sure, sure. I think I feel like I'm pretty lean, but I am always amazed at what people don't pay attention to, you know. I take care of I have my financial Friday every morning and just go through and cross-reference and okay, and it's fun I find it fun, quote unquote, just to see and go, okay, and then it just gives you cause to pause to go like, okay, was that expense really needed?
Hmm.
Would we
Hmm.
miss it if it was gone? Do we need it as much anymore? Or,
Yeah.
um, and then having that conversation with my team, with the leadership team too, to be like, okay, it costs this much. I'm not sure it's needed for us. Okay, I think we
Yeah.
can go without, but I'm not the one in it day to day. So tell me, what do you think? And so when we can just have those conversations, black and white, and come to a consensus.
Yeah.
Uh, Okay, I want to know what I can do right now in the next 3 days. Tell me,
So,
tell me how to
so
make more money besides raise my rates.
right. So I love that you have that financial Friday where you just sit down and you look at things. So I think that's one thing, just having a kind of a weekly 15-minute looking at your books, right? It
Mhm.
doesn't have to be super complicated. It doesn't have to be super in depth or stress you out. Just saying, hey, this is where my revenue is. This is where my expenses are. So reconciling those accounts and having a simple profit loss statement, revenue minus expenses equals profit. Um, list, once again, going back to what am I on the hook for as far as, gift cards or memberships. And so these are things that I'm going to have to pay out in the future. And then, working with somebody to build out a cash flow. Your expected inflows, what's going to go out, how much you want to pay yourself. So with that comes clarity and then a plan, and then you pay yourself on purpose.
Mhm. Mhm.
One of the other things I've put together is a it's a marketing tool. And actually I think you'll like this. It's it's really determining if your marketing dollars are actually working. So you're looking at what you spend in marketing, how many leads that's getting you, and how many clients are coming from those leads.
Hmm.
Um, and then I think one thing a lot of people overlook is what's the lifetime value of each of those clients that I'm going to bring in.
Hmm.
Um, so I built it in a way where you just plug your numbers in and it says, okay, is this sustainable? Or is this something I need to work on, or was this marketing effort kind of in vain? Did it actually hurt me? And so
Yeah.
that's a tool once again I can share with your listeners.
Paul, I think that would be so helpful because genuinely, I think that is one of the biggest missing pieces. Okay. Um, that we do not understand. And I shouldn't say understand. We get it. We put money out for marketing. We're hoping to get leads, but to get to the granular of how much did we put out time resources, how many leads came in legitimately, the cost of that lead, and then we need to know the average lifetime span of this. Okay. Yes, we have our grand scheme. For me, it could be
Mhm.
10 years, 15 years, but on average, what is our lifetime value here? And
Yeah.
I'm part of a group coaching program, and that's like that's your moneymaker right there. I'm telling you, because everybody across the board didn't know. Okay. They knew the other stuff. They knew the other big numbers, overhead costs, cost per student, that coming, how much we need to make per hour or whatever. But as far as that marketing aspect of how much that is really, that's huge. That's a big one. That would be helpful. I would love
Yeah.
that.
Yeah. I'm gonna share those with this after this. And so
Awesome. Thank you. So we'll make sure that's in the show notes for y'all and I'll send it to the email. So if you're on our email list, make sure you get that. All right. Okay. So I talked about financial Fridays, but what does great monthly reporting look like?
so kind of how I look at it is like I think I'm either we said it before or during. I like to talk to people with plain English, not just accountancy speak. One, I don't like to hear myself talk accountancy. I don't know if that's a word, accountancy.
I
So
was just going to say,
I'm
have you
I'm gonna
trademarked
I'm
accounting?
gonna make it up, right? And so, plain English, revenue, expenses, how much money did I make? How much money did I keep, right?
Yes.
So, simple profit loss statement with, your main categories, your revenue, your expenses, how much money you made. And you can always go more detailed into that. You can break out, what your different expenses are, a balance sheet that actually shows what that deferred revenue is.
Mhm.
And then just kind of a 30-minute monthly meeting with your accountant or your bookkeeper. Um, just kind of saying it's a monthly check-in, right? And saying, kind of holding you accountable, but also saying, hey, this is where I want to be. And this is where I am right now. I think, if your report doesn't tell you what to do next, it's not done. So
Mhm.
it's that dashboard should be, it's a living document. It's not just a one time and done. It's because if you don't update it, then it's just kind of like so strategic plans you put on, you develop it in your corporate retreats, right? And you put them away on the shelf, and 5 years later,
Oh,
blowing dust
yeah.
off. So have we done anything? I don't know. So
No, yeah, no. This is an important document, living, breathing document that genuinely needs to be looked at weekly, I think. And some of you might be daily for how big you are or where you're at in your business.
yeah, it really depends on the size.
Hmm.
Daily might be a little bit more I mean, it's for those bigger studios,
Yeah.
right? Who have teams or have that fractional CFO.
Hmm.
Um, but for, the smaller boutique studios, sitting down, looking at least once a quarter, if not once a month,
Yeah.
would
Yeah.
help. That way you're not going at the end of the year going, what did I what did I
Yeah.
do? I was busy. I was
Yeah.
busy all year. I
Hmm.
don't have anything to show for it, right?
Right.
So
Right. And this is also going to help you guys. Paul, I don't know if you do profit first, but I'm a big profit first person. And there's nothing worse than working so hard and not being disciplined with that income coming in and allocating it, making sure taxes are set up, you're getting paid, you're profitable just so that you as the owner are getting paid as well. And um, it just, you can make, I had this realization a couple of years ago with a very, very successful friend of mine, studio owner, but her profit margin was less than 3%. Exactly. But she said, I pay myself very well. I'm like,
Okay.
oh,
Yeah.
okay,
Yeah.
okay. There's something to, so it's just what you want, she's not
Right.
looking to sell. So those goals determine where you want things. But you can make $1 million, but if you spend 900,000,
Right. It's like,
or you
oh,
can make 250 and spend 100,000 and then
right.
you're
Yeah.
ahead there.
Yeah.
So
Yeah. But your friend with the 3% margin, because she's paying herself well, if she was to sell, they back that out, and then that profit margin goes up a lot. And so,
yes, you are right there. You're right. So um this was I love these chit chats about money. And I'm just, if you don't have somebody who has helped you create a custom dashboard for your business, I cannot tell you how life-changing that was for my business. And just in all the ways, I almost get emotional about it because it was that important for my family, for it allowed me to get the space that we are in right now. It allows me to pay my team really well with and be responsible. And it just takes the emotion out of some decision making, that we have so many decisions that we make. So when we can just be like, nope, sorry, this is what it is, or okay, yep, I can do this. I just have to tweak this a little bit. It just makes all of that decision making that we have a little bit easier. So, Paul, do you have any last parting words that you would like to share with the brick and mortar visibility community?
um, no, but well, yes. Yeah, I believe that, taking that emotion out of that decision making is huge. I think what is it was Steve Jobs what wore the black turtleneck and the blue
Yes,
all
yes,
the time
absolutely. Same thing every
because
day, less
yep,
decisions.
exactly. So if you, I mean, I think it was Tim Ferriss that says if you win the morning, you win the day. And so,
Amen.
yeah, no, that's I've really enjoyed this chat. I think
Mhm.
it's
Yeah.
enlightened me, and I hope it's enlightened you as well. And so,
Yeah, awesome. So I'll be sure to put his information in the show notes. Paul, we didn't talk about how people can work with you. So talk about that process real quickly on how people can help get started working with you, or what that looks like so they can just get a heads up.
sure. So yeah, I currently am accepting clients, both as a bookkeeper, but also as a fractional CFO, depending upon the size of the company, obviously. You can follow me on Instagram at Paul Roch Fitbiz. Um, and I post money tips out there, helpful things for our studio owners. Um, but you can book a short clarity call with me. We can get to, talk about what your situation is, where you are, and kind of what the next step would be. Um, so yeah, so if you want, some calm, consistent owner pay and really some a simple decision plan and less stress in your life, let's talk.
Hmm.
So
Hmm. Awesome. Thank you so much for your time, Paul, and thank you for sharing your wisdom and some great tips and things to think about as we navigate our studio business.
yeah, appreciate it.
All right, everybody. Thank you so much for hanging out with us today. We hope you got something out of this. And if you did, please share it with your business bestie, because the more people that are better with their finances, the better and more businesses will stay in business. All right, y'all. Have a great week. We will see you here, same time, same place next week. Peace. Bye-bye. All right.